It'll come in nice and loud.
Knocking at the door on what I knew for sure. Blew up in my face. Woke up on the floor. Couldn't take no more. My darkest day. But I can't lose sleep on what I cannot change. I chased the lightning, I got soaked in the rain. Danced with my demons till I couldn't see straight.
Welcome to Innovative Strategies with Bill Hasse. This is a show designed to help people with financial literacy, but not the way you have known. This is not your grandpa's financial literacy, as Bill uses his 30 plus years in the financial industry to stretch your financial box from, about a 30,000 foot view of things. Bill and his guests have helped hundreds of clients achieve and surpass their financial goals. If you have any questions at any time, email Bill at bill@billhasse.com. That's Bill at BillHaase.com, or reach out to him here at 216net@gmail.com and just put Innovative Strategies in the subject line. Of course, today, you think you know what long-term care is? Time to think again with special guest Michelle Prather from One America, the Senior Regional Sales Director. Good morning, and listen to that new theme music,
Ken.
huh?
Yeah, a little new music. As we change direction a little bit and focus, we changed a little bit. Thank you to Philip Michael Scales for this new song called "Find a Way," and that's I'm always about. You got to find a way. There's always a solution to every issue.
There's always an innovative strategy.
There's always an innovative strategy. Absolutely. And we do want to welcome Michelle Prather. I want to thank you so much for coming on the show, Senior Director down at One America in Indianapolis, and someone I've worked with over the last few years, and I learned a great deal from. So why not bring on your mentor? Michelle knows how I feel about the training and that goes on in our industry. Some of it being less than stellar. However, Michelle, you're the bright star in all of that. Everything I receive from you is just outstanding and provides me with great insight and great ways to move forward in helping my clients. So thanks for coming on the show.
Yeah, thank you for having me. You're going to make everyone think that I paid you to say that opening, but thank you. That was wonderful.
Well,
thanks for having me.
Yeah, I'm very, very fortunate to be able to attract and have folks like you come on that can do a great deal of good and help a lot of people. And this is a platform I love because we can reach so many more. The purpose is just to help others, maybe help them get an understanding. And today, the understanding is really about long-term care, because there's a lot of myths out there. And the old days in long-term care was use it or lose it kind of policies, right? You pay for it, and if you don't need it, then you just wasted all that money that people feel like, or maybe the idea of I can self-insure.
Mm.
You know, there's a lot of issues, and you and I had a conversation, and I'll let you step in because you know some of the other reasons why folks just don't want to look at this aspect of a portfolio.
Yeah, thank you. Yes, I've been working with financial professionals for, this will be my 25th year, and working in long-term care specifically for 24. So I've seen quite a bit. It's like that commercial we see now. We know a lot because we've seen a lot, or however that goes. But there are a lot of reasons why folks haven't been prepared for this issue, and a lot of it can be ignorance. Someone didn't tell them, their financial professional didn't talk about it. Therefore, they didn't know that this is something that they should plan and prepare for. we have a lot of folks out there that doubt or deny that it's going to happen, or they feel like, this is something that's on down the line. And then the third reason that we tend to see is maybe the cost associated with planning and preparing ahead of time. So a lot of people just, out of default will go it alone, and they'll just kind of cross their fingers and hope that, their resources, their income, their assets will be enough to take care of this issue. It's not free. And we'll talk about that a little bit going forward. But anyone that has dealt with this in their own personal families, and many of your listeners have, I have. Yeah.
Yeah.
We've
Deal with
seen,
it now.
yeah, we've seen what could happen. My personal story. My grandfather had Parkinson's pretty much from the time I met him. He had it the entire time, and of course, in the early days, there wasn't any issues. He his hand would kind of move a lot, and my grandmother would yell at him, "Earl, stop that!" and he would smack his hand down, and just to kind of mock her and tease her. But
Yeah.
Until one day, his bladder just stopped working. So oftentimes we think of something like Parkinson's as something that maybe is harder to move, or we tend to shake a little bit, but it does eventually impact organs. And in his case, it stopped working. He had to go into the hospital. And what they had found out, or what the doctor had figured out, was he had been falling. And you may have witnessed this too. But my grandmother was hiding it, because she would say, "I'm afraid they're going to take him away from me," or that she wasn't a good caregiver. She was taking it personal. So she was hiding the fact that he was falling. She wasn't able to pick him up. And she refused to call for help. And if she did, she would call a neighbor to come over and help her to get him lifted.
It's
So
pretty common, right? I mean, it's very common for one spouse to want to take care of the other spouse. And
absolutely.
in that process, the healthy spouse starts to become unhealthy because
That's
they're
exactly what
unable
happened.
to maintain
Yeah.
all the effort that is needed
That's right, Bill.
required to support another person.
Yeah. We've seen it happen. I mean, I hear these stories every day, and that's what ended up happening is that his doctor said, "Listen, if you can't take care of him at home, you got to hire someone to come in and do it." Well, they didn't have the resources. They hadn't planned ahead. No one had shared with them that they should have been planning for this.
Right.
So he ended up moving into a nursing home where he was for about 5 years, and it was not a great experience for him, for anyone really. And a lot of it just had to do with he knew where he was. His body wasn't working as much, but he still had his mind up until the end. And it was really hard. It was hard. All he would say is, "I want a cup of coffee and I want to go home." He couldn't have coffee because he ended up having to have a feeding tube, because Parkinson, had kind of taken over his ability to swallow correctly.
Okay.
So, we hear these stories, and unfortunately, and Bill, you've had it with a lot of the clients that you serve. Oh, that's such a sad story, and I'm sad that happened to them, but it's not going to happen to me. And so we've got to
That's what we
get past.
think, right? That's what we like to think. I mean, like you, my mother has been in a home for over 9 years now.
Yeah.
9 years with
Yeah.
Alzheimer's.
Mm.
And we're fortunate that it hasn't advanced enough that she's going to be forced out of that and into the next level of care, because the cost more than doubles and can triple what a with the $6,000-7,000 a month we've been paying for 9 years. That more than doubles and triples when you get to a certain stage with Alzheimer's. And 9 years is actually a long time for someone to survive Alzheimer's. But she was that way prior to it, and my father took care of her. So the day he passed away was the day we had to say, "Mom, we can't leave you at home alone."
So is long-term care the same as living in an assisted living facility?
It can be. So a lot of people automatically associate long-term care with a nursing home. And maybe that's a part of this, Kent, maybe that's the part of, well, I'm not going, so therefore I'm not going to plan and prepare. But it's a lot more than that. Most of the time it will pay for home care. And that's where most of us want to be. I mean, it took me, a long time to get all this junk. I'd like to stay with it, right? So, and most people, that's where they're most comfortable. That's where they do the best. But yeah, assisted living, adult daycare, which is a growing market because of an aging population. So it covers many different ways of receiving that care, not just nursing home.
Okay, interesting.
Yeah.
Good question. Good question. What about Medicare? Doesn't that cover that?
Oh gosh. So there's a lot of misconception out there about what the government will and won't pay for. And so I'll speak of it generally. Medicare is health insurance. So if I need to go to the doctor, if I'm going to the hospital, I'm having a surgery, that's where my Medicare comes in. Now, the confusing part with long-term care is Medicare will pay for a nursing home. However, it's following a hospital stay and it's designed to be rehabilitative, meaning I just had a knee surgery. I had hip replacement. Now I have to go into a nursing facility to rehabilitate so that I can come back and live on my own.
Right.
And that's where the confusing part comes in. The type of care that we're talking about is the type of care that I'm probably going to need moving forward. From this point, I'm not necessarily getting better. This is the type of assistance I'm going to need for probably the rest of my life. Needing help with getting dressed, getting in and out of bed, using the restroom, getting a bath, those types of things Medicare doesn't pay for. Now, we have Medicaid. Now, Medicaid, we call it the impoverishment process, because what you would have to do is you would have to impoverish yourself. You have to spend your assets in order to qualify for this, mostly funded by the states, partially funded by the federal government, which is Medicaid.
Right.
Medicaid does pay for this. However, it doesn't offer the options that you would get in a private pay setting. Most likely you're going to be in a nursing facility sharing a room with someone else because that's what Medicaid will end up paying for. But it would require you to spend down your assets to be
Right.
empowered.
And if you go look at those Medicaid facilities, and you may want to think again about where you want to stay. And I know they try to do their best,
Yes.
but again, we're talking a different level that one may not be as comfortable in that environment.
Well, and Bill, most of the time it's a crisis situation. Again, it went back to they didn't plan, they didn't know, they thought they had time, they didn't believe it would happen. Therefore, they didn't have a plan in place. And the plan was to spend down all of my money so that I can end up qualifying for government assistance. That's not usually what people want to do. It's just what ends up happening. And maybe it's, again, through lack of education. That's why I love that you do these types of educational shows, because people need to be made aware. And then here's the other issue. So we know that the Medicaid beds are really limited. There's only so many out there that you can have access to. So if this particular facility where you would rather be doesn't have any beds available, you may be going across town, which is what happened to my grandmother after my grandfather passed away. She had a stroke and she ended up needing nursing home care. She had to go, an hour away because that was the bed that was available at that time. So we know we have an aging population. That is a trend. We've got a very large generation that we like to lovingly call the silver tsunami, because they're coming and we have to prepare.
I'm part of that.
You look like
As Matt likes to point out from time to time.
You're there.
Yeah,
So
I'm a baby boomer.
we're planning and we're preparing, because this large generation is the majority are doing very well, like yourself. They're just starting to retire, the oldest of that generation. But we know that there are 10,000 people every day this year turning 76. That's the oldest of the boomers, and we've got 20 years following right behind them.
Right.
But most of them are still doing well. We are not expecting this hit to this industry for another maybe 5 to 10 years. At that time, we expect high demand. High demand will require more cost, right? High demand, it will increase the cost. So will there be enough beds available? That is a legitimate question that we need to make sure that we're answering. And like you said, with your mother having Alzheimer's, that is another major concern, because there is a big increase in Alzheimer's. So in the past decade, it's increased 146%.
Right.
Now, there's a reason, because our bodies are living longer. So we are creating a new issue, through medical technology.
So that silver tsunami, have we seen that timeline speed up after the pandemic, or is it remained the same?
Well, there's a lot to unpack there. With COVID, of course, the first wave of unfortunate deaths were in the nursing facilities, and I don't think that the officials, administrators, government officials realized what was going to happen when they did that. I can't bring myself to believe that they did it on purpose, knowing what would happen. But nonetheless, we know what happened. It spread throughout those nursing facilities. But what also happened was people started keeping their family members at home. So they were, we're sharing in that care. Spouses are doing care providing. Adult children are taking turns making sure that their parents, because they didn't want them to go into a facility. So now we have caregivers that maybe aren't trained or ready, willing, and able to do so. And that also caused a different ripple effect, because when you have spouses caring for unhealthy spouses, it breaks down their bodies. It breaks down them physically, emotionally, financially. I'm sorry?
It's draining. It's 24/7 in some cases, and it's draining. And then, you wind up 100% being just in the caregiver and never, finding that time to get out to the store and get your laundry done and just the simple things in life. I've seen it, and I know you've seen it. And we've heard the stories about it. We've had discussions about this, and how folks just, a lot of folks don't understand, that the real true cost. It's not just financial cost, it's physical cost.
Very much.
And we talk about, we throw numbers. I'm not a big fan of using a lot of numbers, but you and I have talked about how, the numbers are pretty high, that someone at some point in their lifetime is going to need long-term care. And if they're married, that the odds go up, that one or the other will. And those odds are very high, but yet we run into so many people who feel that they are in that very small amount of percentage that never going to need it. And so they don't want to look at this. Now, what are some of the aspects of a long-term care policy? Because they've changed so much over the years. And I think the ones that are out there now are amazing. And I think One America's is absolutely amazing as well.
No, thank you. I would agree. We've been doing it a very long time. We've offered options for over 30 years, and most long-term care policies, they go through different evolutions and iterations, and we've definitely seen that. So, I'll start back to when these policies first came into the marketplace, and then what we've seen and how they have evolved to meet more of the needs. So some of your listeners may have bought one of these old policies, which, by the way, I applaud anyone who has bought these types of options. It's always appropriate to transfer that kind of a risk to an insurance company. No different than homeowners coverage. Do I want to replace my entire house if something happens? Not dollar for dollar. I don't want to pay retail dollar to replace my house, but if I could pay pennies on the dollar via paying for that homeowners coverage, that makes fantastic financial sense. So these policies first originated in the 50s, really, and then really came to be in the 70s. That's when we really started to see the spike, and they were nursing home policies. And nursing home policies were really important because families started to kind of move around. The family dynamics had changed, right? So it used to be that, for generations, we moved our aging parents into our home. But once we started seeing females work, in the workplace, we had two working parents in most homes, that it kind of changed the dynamics. They could not do it. So then they would outsource that care, and their family members would go into nursing facilities. So, but it evolved from there, because it wasn't just for nursing homes. Again, we started to see home health care and assisted living, different types of settings for care that, the industry kind of had to follow along to evolve that. So what you see most of the time, and it's definitely been our practice, as new types of alternative ways to provide care comes in to the marketplace, we will adjust those previous policies. We'll add amendments so that their policy that they bought a while ago would also include, for instance, home health care. We would go back and amend those policies to allow them to have that kind of access. We know people do better at home. We know that's where they want to be, and of course, it's less expensive to do so.
Absolutely. I agree with you. Most people do want to be at home, but you can't always have that case. You have to have your options. You have to have your choices. But So what's really changed in the industry from those policies from the 70s, where I think in those days it was use it or lose it kind of a policy?
Yes, that's true. So, and again, any type of plan is appropriate, but there were a lot of reasons why people weren't purchasing those, or they did purchase them and they became disgruntled, if you will, with those types of policies. So it works very similarly to health insurance or car insurance or homeowners. I'm going to write a check for whatever that premium is. I'm going to send that in, and if I do have a legitimate claim, then of course that insurance company would pay that bill. But if I never needed care, then there's nothing there after the fact. I don't have access to the money that I paid in. There's no cash value growth in it. There's nothing that passes on to my family. So that's where the use it or lose it mentality came in to play.
Right.
But through the years, there have been some options out there that have really kind of taken over that marketplace. Where you can have access to certain life insurance policies or certain annuities. And then the government realized, wow, this is going to be an issue. So why don't we give tax incentives to encourage Americans to plan sooner rather than later? Rather than waiting for them to impoverish themselves to be on government aid, why don't we give them tax incentives to encourage them through life insurance policies or annuities? So I'll give you an example. Most of your listener base will understand the basics of life insurance. They either have bought life insurance before, or maybe they have been a beneficiary to someone that had life insurance. But we know the basics of life insurance. I pay a premium, and if it's a whole life insurance policy or something like that, then I will have cash value. When I die, not if, when I die, my family will receive a larger amount, and they will receive that income tax free. That's the whole purpose of life insurance, is to make sure that my family is cared for, those that I love, and to provide and protect for. But the government recognized this issue, and they said, we are going to allow the insurance companies to sell these life insurance policies and allow that client to not wait until they die to benefit from that policy. They can use it while they're alive, income tax free. So that, if we used a $250,000 death benefit, we can use all of that death benefit income tax free for nursing home health care, assisted living. So whether I live on it for care or I die, 100% of it will be paid out. And that's what's been so attractive for most people, is they know it's not been wasted.
Yeah, no, and I like it. We call that accelerated benefit.
Mm-hmm.
Accelerated death benefit, I guess, would be the more proper term that we do with that. But one other thing I want to make clear is what really is the most basic thing about a long-term care policy is it's a paycheck.
Yeah,
it's a paycheck that goes into effect when you run into a scenario in a situation that requires more finances than what you're typically expecting to spend. Because when you do put a plan together for retirement, you try to guarantee what your monthly income is going to be, but that does not account for life happens events.
So we get that accelerated benefit, right?
Yep.
Mom has already passed. Dad's alive. Hey, I don't care. I want his life insurance money. I don't care about his bills. He's dead. He's dead.
True,
right?
but he might need to use some of those funds, right, to help cover the costs and expenses of between the time he becomes ill and the time he passes.
Well, yeah, but I don't.
But you don't want to use.
I mean, here's what an average guy says, right? He's like, oh, I love my dad, and whatever the Medicare will pay for or whatever he has is all right. I don't care if he racks up bills, because when he's dead, they're not going to get their money.
Actually, right? Michelle, you have a really wonderful story that goes right along with this.
Yeah. So, and I'll address what Kent says, and then I'll tell the story. If you're talking about the two people that bought the policy,
the 3 years,
yeah, for 3 years. So Kent, here's what happens. We'll just play the scenario. Yeah. So Dad goes into a facility, and it's going to be billed monthly. If he doesn't, if he only went in for 1 month, you're right. When he passes away, you don't have to pay that bill. I mean, they will settle it out of his estate, but nonetheless. If he's receiving care for months, well, he has to pay that bill every month in order to stay into it and stay in that facility. So that bill would have to be paid, and that bill comes from someplace. I mean, we all have bills. How do we pay bills? We use income to pay bills. So a lot of the misconception out there is that I have plenty of assets, and I can pay for this. It's not an asset issue. It's a cash flow or an income issue, which is what Bill was referencing. It's a cash flow. I have to have enough income coming in to make sure that those bills are paid, because this is an ongoing event with no end date. I have no idea how long this is going to last. I can't plan for, what a lot of the industry says is that the average stay is 2 years, or 2 years for men, 3 years for females. Right now, the average length of care, regardless of gender, for Alzheimer's is 8 years.
Right.
That's the average, which means half of them will need care for less than 8, but the other 50% will need it for longer than 8 years. So, Bill, your mother is now in that upper 50%. She has now exceeded the average and still going, right? So she's still fine. So she is in her 9th year. We have seen this growing issue. As a matter of fact, the longest claimant we have right now, they're in their year 21.
Okay.
So meaning that was probably the best financial decision they made, was they didn't know how long it was going to last, but lo and behold, here they are at year 21 and it's still being paid out. So the story that I shared with Bill previously, I had a financial professional come up to me, and they were I was at an industry event, and they were coming up and they were sharing this story about their clients. So this particular financial professional, very much like Bill, is an advocate. Make sure you're planning and preparing for this. This is one of the most devastating things you'll face in your retirement years, if not for you, for your spouse or your family. And it was a female advisor. So she came up and she said, I have these clients and I did what I was taught to do. I encouraged them to buy long-term care for 3 years. So they have 3-year policies. It would pay out for a total of 3 years, 3 years for her and 3 years for him. They were extremely healthy people. As a matter of fact, he was an avid tennis player and played regularly. The only thing he had wrong with him was he had some heart issue. She didn't clarify, but some heart issue. He had to take a pill every day. As long as he did that, he lived a very full life and very healthful life. So fast forward, they bought these policies. They did the right thing. He gets diagnosed with Parkinson's. So through their research, this husband and wife had figured out that Parkinson's, it's a long game, right? It's a long battle. And in the early days, maybe he won't need as much care. And it's really the end time, which you really don't know how long he will need that assistance. So she did what a lot of spouses do. She said, I will take care of him as long as I can, because I know I only have 3 years of money, from the insurance company to pay for it. So I want to wait until I get down to the bad stuff. Well, she was doing all of the caregiving when he did start to get a little bit worse. And it finally took her children to talk her into, Mom, turn that on. That's why you bought it. But she was afraid that they'd burn through it. But it was breaking her physically. So they finally turned it on. And here we are 3 years later. They're out of money. They're out of that policy. And now he's back onto private pay. So they're paying out of pocket again because he was still living. This is the hardest part, what I'm about to say. So I do hope your listeners can handle this part, because it was really hard for me to hear. So the spouse, the wife, went to his doctor and they had a conversation about stopping his heart pill, because she wanted him to hurry up and pass away, because she was afraid he was going to burn through all of her retirement and she would be poor.
Wow.
And it was just the hardest thing that I had heard. I'm a wife myself. I can't imagine having that conversation about, do I take care of myself knowing I'm going to be living on my own, and my husband that's draining all of our money, I need him to hurry up and pass away so that I don't become poor. It's just, no one should ever be put in that position.
Right. I agree. Again, these are life happen events. Yes. that can come to us, in the turn of a dime, as we old folks like to say. It's crushing, and because one of the biggest problems about long-term care is it does put people into financial desperate situations. It bankrupts it. It's the number one reason for bankruptcy in retirement. If I'm correct, I know you can correct me. I'm certified long-term care specialist, but I bow to you in all knowledge in that world. But
Well, it's medical, right? Because it kind of gets lumped into that healthcare arena. And that's the unfortunate part is people think that their health insurance pays for it. And it doesn't. So we have to have another plan. And that's my husband and I'm younger. I'm 45 years old. My husband and I have lifetime coverage. I don't ever want to have that conversation. That's why we bought an unlimited benefit. I don't want to have to worry about running out.
let's talk about that. First, I want to say hello to Gary over there in Singapore. Thanks for chiming in again today. Love having you on the show, listening in. But let's talk about that. So you talked about the person who's still on benefit for 21 years.
Yes.
And going forward. Now, that's a big change in long-term care policies that are available and on the market now that weren't there 30, 40 years ago.
That's correct. So, as the evolution happened, actually in the 90s, there were, there were a lot of companies out there offering this, and they were offering unlimited benefits. But they slowly started to kind of get rid of them. There's only one or two companies in the marketplace now, to my knowledge, that has an unlimited benefit. One of them being my company. And we've been doing it for so long that we have the data that we can back it up. But a lot of these companies have jumped into the market and they quickly jump out because they realize, wow, we've got longevity. We've got Alzheimer's and Parkinson's and other dementias that we really can't calculate the cost. And of course, you want an insurance company to be solvent. You don't want them to be making bad decisions or not pricing these appropriately because you want them there when you end up needing it. So a lot of companies started to pull back on those options in the 2000, really around 2009, 2010, and a lot of it had to do with that financial crisis. And then on top of that, the decreasing interest rate environment has had a profound impact on the insurance industry because they rely heavily on the interest rate market.
And we talk about that on the show about how money works and how it affects you, our listeners. And here is a cause and effect financially and economically, how that works. I'm familiar that the policy that's available out there that basically it's you get your money back one way or another, whether you decide to cancel the policy and get refund what you've paid in your premiums, or you go on benefit and you draw from it and take from that. Or ultimately, as you were saying, it could be tied to a life insurance policy that then you get the benefit of the death benefit of that policy. So it's kind of a win-win-win scenario and a great protectionist against ever going bankrupt while you're in your retirement or putting your spouse in that difficult spot. I had a gentleman I was talking to, and he'd been looking for a long-term care policy for 4 years. And so he finally reached out to me. Someone had introduced him to me, and he was looking at a very hefty price tag to, he was a very high level executive and could afford, a high level benefit. But he was only looking at himself. He wasn't looking at including his wife. Yeah. And honestly, I looked him straight in the eye and said, for the same amount of money, you can cover your wife. Sure, the benefit's going to be a little bit lower, but you're both going to be covered and you can be covered for life. And wouldn't you feel more comfortable with that? Because the reality is men don't need it as much as women, right? Men have a tendency to drop dead, and women are fighters and live longer.
Yeah, let's unpack that for a moment. It is true, generally speaking, or historically speaking, I should say, men that would need care first, their female spouse, provided, male-female situation, their female spouse would do the care providing. He would then pass away. Well, then she would now need care, and the children would, find a facility or something like that. So it is true, approximately, and I haven't had updated percentages on this, but approximately 75% of nursing home residents are female. Right. And it's because of just how that has played out. Now, here's where things are changing. as I mentioned earlier, with the rise of Alzheimer's, Parkinson's, and dementia, we have found that males need care just as long, if not longer, than females. Because when it comes to physical, that's what you were referencing. Physically, men, we know biology, men tend to die sooner than females. But when there's just a cognitive issue, the body is taking out of that equation, right? So now they just need care. They just need care for just as long as a female needs. We've heard, and maybe some of your listeners have heard this as well, 70% of the population will require some kind of care in their retirement years. We don't know how long. That's just 70% of the population. But a lot of people think that that's a 70% chance that I need care. Well, and 30% that I don't. Well, I'm the 30%. It's not going to happen to me.
I've met a lot of those folks.
As have I. and we hear a lot of reasons. So here's some of the things that I have heard throughout my years. Michelle, everyone in my family dies young. That means I will die young too. Well, the difference is, medical technology, we're living longer, we're more knowledgeable about our health, there's less smokers, there's, my husband's from the South, they used a lot of Crisco. I don't see that being used too much anymore. We are living longer now. The second thing that I've heard is, Michelle, I will shoot myself. This is a very popular response. We don't see it happen, but this is definitely something that a lot of people will say. And then my favorite that I share with everyone came from my own father, who said, Michelle, if it happens, we'll pray about it. And I teased him and said, Dad, who do you think sent me here to tell you to do it? We know why people say these things. They're really trying to deflect, right? It's a very emotional topic. And a lot of us try to avoid that. But it doesn't make it, go away. So I'm here to tell you and your listeners, it's not 70% and 30. It's 0 or 100. Right. It's 0%. I won't need care. I just, will die peacefully in my sleep. That's the way we all want to go. Or it's 100%. I will need it. It's one or the other. I will need the assistance. So,
and I recall the conversations we've had about this and how you've helped bring that insight to many agents and advisors and whatnot. I do want to say good morning to Sally and Ted. Thanks again for listening in. But we also have other issues. So you're bringing up dementia, Alzheimer's, and Parkinson's and things like that. But look so I just ran into a gentleman and was talking with him, and he's having repercussions from COVID when he had it in early 2020. Here we are in early 2022. He's still having physical and mental health issues. Now, I don't know how rare that is or how common that is, to be honest with you. I don't think any of us know, and we won't for a while.
If you listen to the news, it's quite common.
Right.
I mean, that causes it.
Exactly.
So it's not COVID, it's the news.
When you were talking about shortage of beds in these assisted living and stuff like that, I'm thinking ICU units. Well, we hear every day, only 9% available. But and so. But so there's other things, and there's other things that can come along as we age and we get older, because again, you're right, we are living longer typically.
Well, and I think that's the interesting thing I think we all have to think about is I mean, I get excited because I'm like, hey, we lived through a pandemic. I mean, this is we made it to the other side, but at the same time, long-term effects of what this virus does, we don't know, because we're not in that long-term.
We don't even know what the long-term effects are of the vaccinations and other things, and we're not here to get into the discussion.
No, right, but that's why I'm saying is I think there's a lot down the road that I don't know. Right. I battled the virus for 14 days back in 2020, but I don't know what in 3 years if all of a sudden I'm like, oh yeah, that's from that, right? I mean, as crazy as it sounds, because we're not there yet, right? So you got to kind of plan and say, well, I don't know.
Well, if anything, and you're right, as the industry, we're still watching what we call long COVID. We don't really have because we're still in the middle of it.
Yeah.
We don't have all the data that's needed to figure out, what this, and the crazy part about this virus, as you have witnessed, some people I haven't gotten COVID. I haven't. thankfully been able to avoid it somehow.
Knock on wood.
Or
How many-
I have had it and I just didn't know that I had it. I don't know. So some people it's impacting and some people it's not. And we still don't know who's going to have those long lingering effects and who won't, who will fully recover, who won't get it at all. We really don't know. But here's what we've also kind of figured out from this is it increased that that necessity of getting plans in place.
Yeah.
I think a lot of people are like, wow, this is real. I need to make sure that my family's prepared. I need to get some things in order. People have done the right, legacy planning and received life insurance, and they've got their long-term care. We saw quite a bit of that, where people just wanted to be educated. What are my options? What can I do? I want to make sure plans are in place because I don't want to be like my neighbor. I don't want to be like my sister. I don't want to be put in a position where I haven't planned and I'm not prepared.
So in that aspect, and we know this is what insurance is about. It's about protecting the I don't knows.
Yeah.
Correct.
Right. I mean, that's what homeowners insurance is about. Car insurance is about. Life insurance. All insurance is about the I don't knows going forward. And there's certainly plenty of those. And boy, oh boy, is our life changing so rapidly these days. And who knows how many more variations are we going to see that are coming out? How many more booster shots are we going to need to do? And how does it affect someone who's young versus someone who's in their retirement years?
Right.
A 5-year-old versus a 75-year-old, and go on. We've experienced that here at the station.
So I being the average Joe, I allow the scientists and the doctors to figure out that stuff. I don't have enough time or energy to waste on that. I'm going to trust them, right? Because if my life comes down to it, I'm going to trust that they know what they're doing. Right?
Well, there's a good reason why they always say get a second opinion.
Sure.
If you've not worked with doctors, I can see how you might be very trustworthy.
Sure. Now here's the question I asked earlier in the show. You both brought up saying, hey, you got to kind of take a look at this type of care for that, as part of the portfolio. Okay. But now we've had 4.5 million people walk out a few months ago of their job. Money is a little bit different now.
You're right.
And I am scraping to, meet the end of the month, let's say.
Mm-hmm.
And how do I how do you explain that to people?
How do you budget for
exactly.
what is really a protectionist idea of your portfolio? And I think Michelle has that answer quite well.
Yeah. So first and foremost, you have to live today. So if this is a situation, I wouldn't recommend that long-term care planning is right now. It is something that should be discussed. Of course, it should be, top of mind, that this may be something that we're going to plan on down the line. But first and foremost, you have to take care of, and a lot of us in working age, my girls are about to go to college. I'm still trying to pay down mortgage. All those things that most of us face, through our working years. There are options. There are different ways to do things. For instance, I'm younger. So what I've done is I've implemented a strategy that we call stacking. So what I've done is I basically bought a very minimal policy in 2014. Fast forward as, life goes on, my girls are going to graduate, things like that. I earn more money. I sell off, other assets. I stack another policy on top of it. I can use them together. And so some people will just stack policies throughout the years because the younger and the healthier you are, the better the numbers look. Not saying that, as we get older, they don't look good. They still do. But of course, I can get the biggest bang for my buck in those early days. That's a strategy that younger, healthier professionals are doing. But most of the time, Kent, what we're seeing are those people that are facing retirement. Maybe they're in their 50s, 60s, even 70s, and they do have the additional funds. Maybe they have saved up in retirement accounts. We see a lot of that type of business come our way. IRAs, 401ks, 403bs. A lot of people aren't aware that they can use those dollars to fund their long-term care plan without wasting it. So there's a lot of options. I always say the good news is there's a lot of options. The bad news, there's a lot of options. You need someone like Bill that can kind of, go through that with you and figure out, what's right for me. I do not want to be in a one size fits all. I hopefully I'm like all of your other listeners. I happen to think I'm a little unique and my situation's unique.
Right.
I want something tailored that fits what I need. So maybe I use some of my retirement dollars. Maybe I have cash in the bank and I want to use that and just pay one time and be done. And it's really just an asset transfer versus coming up with something out of my budget. That's the good news, is the market has really evolved to meet anyone. Now, here's what I will tell you. The only people that won't pursue these types of options are those that have the smaller assets, maybe the smaller income. They may want to look forward to Medicaid planning and get those plans in place because they will most likely be candidates for that taxpayer assistance.
Yeah.
Right.
And Ted says, I had 2 mild heart attacks because of COVID. So there are definitely effects of COVID after COVID. And he's had COVID 3 times. So being prepared for what if times, to me, should be a priority for everybody. And then Sally says,
You're not allowed in the studio, Ted.
yeah, don't be my business partner.
Love you as a listener.
That's it. So Sally says, my husband and I run our own business. We are health insurance brokers. We also work with long-term care products. Michelle is spot on. You will either need it or not. And the problem is, if you don't have the right solutions in place now, when you need it, you cannot get it. Michelle, and you kind of just did, but she says, can you share the value statement you present to your clients regarding the importance of putting it in place now while you're quote unquote younger and healthy?
Yeah. Oh, gosh, that's fantastic, because oftentimes we do think that this is something on down the line. So the first thing that I will say, the younger and healthier you are, the less expensive it is. There is a financial guru out there that will say, don't get it until you're 60. And I completely disagree. And what he's talking about are those old type policies, but those old type policies can increase over time. The types of policies that I tend to deal with, they are guaranteed to never change. So if I'm buying it, in my 40s, well, those premiums will lock in. So I don't have to worry about rate increases later. And again, if I don't need it, then my kids will get it, or it'll go on to my husband.
Well, and it's important to talk to your advisor about that right type of policy, because there are policies that will increase. They'll tell you no. And, a year later, all of a sudden you get a big increase. It's like, wait a minute, what happened? Well, we changed directions as an organization or something. And so, like Michelle, I like to only deal with those types of companies, first of all, that are extremely highly rated, been around a long time. One America has been around over 140 years. Yes. And these companies that are solid and are going to be there for you, they're going to lock in and guarantee that your premiums are not going to go up.
Yes. And that's important, because I don't want surprises. When my car insurance goes up, it makes me mad. I get irritated over it, right. Especially if I've had no claims. It's like, why are you raising me? And being in the insurance industry, I understand why it happens, but nonetheless, it doesn't make it easy. Sure. So I want I want certainty in uncertain times. I want to make sure I know what I'm dealing with. I can plan for that. I can budget for it. The other thing that a lot of people don't think about, or let me say it this way, most of the time when we think about long-term care, we think about older folks, especially if we're younger. I'm thinking that's on down the line. But here's what I will tell you. Most people don't think about this. So our number one claim right now is death, right? Because we are in the life insurance business. So we pay out all of these contracts. They will get paid out at some point. So number one would be death. They get paid out. Number two is cognitive issues. That makes sense. And Alzheimer's, Parkinson's, dementia, because we're also in long-term care. The third one usually shocks people. The third claim is cancer. Yeah. So most people think of cancer. If you haven't had cancer, you think of it as something you die from or something you heal from. Mm-hmm. But most people miss the battle in between, right? That when you're weak and you're frail and you need that assistance, you need someone to come and help. These policies pay for that. And that can happen at any age. As we all know, cancer happens at any age. Accidents happen at any age. Believe it or not, strokes happen at any age. Yeah. So these policies pay for someone. I talked to my husband about it, and I was like, listen, we bought our first policy and it would pay $4,000 a month. And he said, Michelle, I know what the costs are. They're, $6,000, $7,000. that's not enough. And so what I said to him was, would you appreciate a check in the mailbox for $4,000 to help you take care of me? And he was like, well, yeah. And I'm like, that's what we're talking about. Even though $4,000 wasn't enough to pay a full-blown nursing home bill, it would relieve a lot of pressure off of us coming up with the entire amount. Now, since then, we've stacked another policy to fill that gap, but there's a lot of different ways that younger folks can implement these.
Great point. You know, long-term care doesn't necessarily need to be 100% coverage, because we don't really even know what 100% coverage would be, right? We don't know, is it Parkinson's, dementia, Alzheimer's, cancer, whatnot. We don't know. And what are those costs going to be in the future? We know they're not going to be less than they are now. We've never seen cost of care go down that I'm aware of. It's possible. We have seen taxes reduced from time to time, but you know, and so Ted, you had a good point too. I thought you brought that up.
Yeah, I do.
Yeah, and again, this is what we're talking about. These are options.
And what he says is, you know, something for people to remember is it doesn't hurt to check out your options to see if it fits your needs.
Right, and it's protectionist.
Yeah.
It is protecting your other assets is really part what this is all about. You know, you have your risk side, your investment side, then you have your insurance side, which is the protective side.
Yeah.
We used to call them pensions. We don't have those anymore. Now we have 401ks, we have Roths, we have 403bs, but those are all risk sides. We don't have that protective side anymore. And that's the value I try to work with in helping folks bring that back into place so that you're not 100% at risk when at the worst time of your life, maybe within that 5 years before to 5 years after that you're retiring, when you're most vulnerable to a market correction, as they like to call them nowadays, and that will affect for the rest of your life how you're going to live your life.
Yeah. And of course, Sally asks, and I think you all addressed it a tad earlier, is, hey, if I don't use it, do I get my money back? You know?
Well, in these types of options that we're mainly discussing today, what would end up happening is you would either have access to your cash, so I can tap into it, I can take withdrawals from that, I can take loans from that. I'm either going to use this larger amount via the death benefit. You know, maybe I put in 100,000, but my death benefit's 250,000. That means I'd have 250,000 for my long-term care tax-free. If I don't use the cash and I don't use it for care, I will die at some point. That 250 will pass on to my family income tax-free. One of those three things will happen. I'll either use my cash, I'll die, or I'll live on it for care. There's not another option, which is why they're so attractive. Something else that, because you started to talk about this, Bill, the risk side, the 401ks, the 403bs, and IRAs. We also talked about, you know, folks that maybe have minimal assets or minimal income and what their options are, Medicaid planning, and so forth. But let's talk about the opposite end of that spectrum. Let's talk about the listeners that have saved up a nice nest egg and they're doing well and they feel that they have plenty of money. Maybe they have been told by their CPA or their attorney, you have plenty of assets, you don't need to buy long-term care insurance. You can just pay for it out of pocket, which, by the way, I don't recommend that. You know, that CPA or that attorney would never tell you, look, you have plenty of money, drop your health insurance, you can just pay for a surgery out of pocket, or they wouldn't do that. And most of the time they're unaware of other options or tax laws that are available to bless Americans. So here's what happens. We're just going to kind of play this out. Let's say I don't have a plan in place and the bulk of my money is in retirement accounts, because that's usually what we find with most Americans. They've done well. They saved through their employer sponsored programs, 401ks, 403bs, etc. So now here we are, and I've got this nice big portfolio. I'm living comfortably on a retirement income. Let's just use round numbers. I'm living comfortably on $100,000. But then bam, suddenly something happens, and I now need an additional $100,000 because I have this new bill coming in, right? My other bills don't go away. We are still living. My spouse is still living. I still have obligations. So now I need this extra $100,000 a year. Where do I get that income? Here's what most people do. They start pulling it out of retirement accounts, which that's what it's there for. But most don't understand the ripple effect of that action. Here's what happens. Number one, we don't know what the market's going to look like. We don't get sick when the market's high. Sometimes we get sick when the market's low, right? And if you pull that money out in a down market, that will have an adverse effect on the entire plan, right? So number one, we don't know market. Number two, we don't know what the tax environment looks like. Right now, most people would agree that our taxes are pretty low. I also think most people would agree our taxes are most likely going to go up at some point. So we don't know what the tax environment's going to look like. So we have to now pay taxes on that money. Here's the other thing that happens. When I pull that money out, the government sees that I now have this additional income. And guess what? They start messing with you. So now you're in a higher tax bracket and you're most likely in a higher income bracket for Medicare purposes.
Bingo.
So now your Medicare premiums have just increased because you're showing more income. What we tend to specialize in, Bill does this, is we like to focus on invisible income. Now, why do I say invisible income? What that means is the government doesn't see it as income. And what is that? It's income from insurance sources. The government doesn't recognize that as taxable income. Therefore, everything stays the same. I'm still in my lower income bracket. I don't care if the market's up or down because I've turned on this stream of income for long-term care, specifically for long-term care, to pay for these things. So it's a better way to self-pay. It's a more tax-efficient way. We are all tax rebellious. If we can legally avoid paying taxes, we try to, I said legally, we try to do so. And that's what these types of options and this type of planning really does for Americans, is it make sure that we're working as efficiently as possible with our money.
I think the beauty of this topic is that, when you think of long-term care, right? So I'm 52 and a half, right?
We're still doing half years.
Yeah.
Aren't we?
Oh, yeah, always. And when I think of long-term care, I go back to when I was maybe 5 or 7 years old, and the nurses are smoking cigarettes, and and we went to see my great grandfather who's got tubes and is miserable, and it was more of a prison type atmosphere than what it is today. My daughter works at one that they call it's the one right over here on Bull Valley, but they call it like a spa or something now.
Oh, right.
It's got a Starbucks in it. It's you're just like, holy cow.
Yeah, that's another subject.
Yeah.
I could talk to you about that just through experiences with my mother. But that's a subject probably for another day. But yeah, so really the important thing here is for folks to understand, and the reason why I love having you on, Michelle, is you so clearly point out the value and the reason for the importance of looking
Right.
into this as being a part of your portfolio. As Ted had said earlier, it may not be for everybody,
Yes.
right? But it is something you should look at as one aspect and understand how it works, because I'm confident in I think 100% of the people I've talked to about it had the wrong concept.
Well, yeah, I mean, the beauty and what I'm taking away is I'm just sitting here, and you have auto insurance. This is long-term income, right? I mean, long-term care or income, I guess, right?
Well, it's income.
Yeah. So to look at it differently, to change your lens and shift your paradigm, perhaps is to go, oh, okay.
Well, wouldn't you have loved to have some type of insurance policy so that when you're all of a sudden you've got 2 or 3 kids going to college and you had some kind of policy that kicked in and started giving you extra money?
Yeah,
Wouldn't that be great?
for that.
Yeah, I'm done. I'm done with it, but I sure would have liked that a few years ago. And and that's along similar lines.
Mhm. Well, I like to say this. We seek knowledge because knowledge gives us options. Options give us freedom. And we all want the freedom to choose what it's going to look like for us. And
I
that's
can write that down.
yeah, it's good. We need knowledge, so we have options. Options give us freedom. And I'll leave you, hopefully your viewers with these last 2 questions. I ask these questions to everyone, and I encourage people to ask them themselves. Number one, the first one is, you may not ever need care, but if you did, how will it impact your family? because it's truly who's going to be impacted. What's going to happen to spouses? What's going to happen to my adult children? What's going to happen to, the siblings? Because, I got brothers, we don't agree on anything. The second question, as simple as it sounds, is, and if you did need care, how will you pay for it? Those two questions are very, very straightforward. If I need it, how will it impact my family? And if I do, how do I pay for it? It's not free. It's very expensive, but there are options out there. I might pay for it myself. I might use government, but I might also leverage my money, pay pennies on the dollar, use tax efficient ways to create this income to protect everything that I love.
Yeah, and I love that. It's because there's several different ways in which you get involved with purchase of a policy. It could be a single pay, a 10 pay, 20 pay. There are a number of different options out there, and it's much like when you buy a car. Do you take a loan out for 3 years, or do you want to get those lower payments and make it a 7-year loan?
That's it. Of course, that music says it's absolutely time to say goodbye. Michelle Prather from One America, thank you so much, Senior Regional Sales Director, for spending some time with us this morning to help educate us on long-term care. So we had to think about it, right? Which is absolutely great. Of course, you've been listening to 216net. This is Innovative Strategies with Bill Hasse. Tune in at 12:30 for questions you never thought you could ask in church. Until then, everybody, think innovatively.
Thank you, all the listeners. Thank you, Michelle. Really appreciate you coming on. It's my privilege.
Mine. Thank you, Bill. Thanks.